Do you want to hear directly from the ATO and leaders across the SMSF sector on the latest trends, tools, strategies and more to help you deliver seamless client experiences and generate impressive outcomes for your clients? The SMSF Advisor Technical Strategy Day will do exactly that. Our expert-led sessions will explore the changing legislative and regulatory landscape, arming you with the must-have knowledge to keep ahead, combat risks and reap new opportunities. Visit smsfstrategyday.com.au to learn more about our game-changing sessions and the experts leading them. Tickets are selling out fast, with only a small handful remaining in each state. Don't delay and miss your chance to attend.
This is a Momentum Media production.
The SMSF Advisor Show. Your expert insights into the biggest themes shaping the SMSF advice industry.
Hi everyone and welcome to the SMSF Advisor Show. I'm Miranda Brownlee and I'm joined by my co-host Aaron Dunn. Hi Aaron.
Hi Miranda, how are you?
I'm good. And how have you been?
Yes, very well, thank you. Probably not as busy as you because there has been a fair amount of news in the past fortnight. And as is always the way, we'll kick things off with what is making news. So what do you have to share today?
So I think the biggest sort of announcement over the last 2 weeks has definitely been the release of the Quality of Advice Review proposals paper. And we've sort of seen suggestions of sort of a whole overhaul of advice regulation. And really the aim has been to sort of bring in some meaningful reform there, and there's a few different proposals listed, but there were some things around changing the definition of personal advice and replacing the best interest duty with an obligation to provide good advice. There was also a removal of some of the documentation that advisors have to do now, such as fee disclosure statements, and it's changing records advice so they only have to be supplied on request. So it's a pretty significant sort of proposals there.
Yeah, and this is really about trying to move the industry into being a profession, ultimately, isn't it? So we think about, and we've only got to go back, I think, a couple of SMSF Advisor Show sessions where we were both at the SMSF Association National Conference and at the Technical Summit up on the Gold Coast. And Michelle Levy was there and obviously started to speak about some of this sort of principles-based approach rather than the very prescriptive nature in which financial planning and advice was structured. So there is a recognition here that to be able to move to profession, we've kind of got to unshackle the industry. Quite interestingly, as soon as we saw these 12 proposals as part of an interim report release, we had very different schools of thought. Consumer groups were quite forthright in their approach, making sure consumer protections were there and so forth. But in the advice fraternity, there was certainly a sigh of relief, I guess, in many and a level of excitement in some respects to say, yeah, look, let's get the focus back on to what we should be doing, which is actually providing advice to clients in a way and format that they will actually utilize and understand themselves. And that's what this is trying to do. And as you said, there is going to be changes from the context of best interest duty and the provision around good advice and the concepts around general advice and so forth being changed. So yeah, there's a lot of positives, but there is still a lot of water to go under the bridge because this, of course, is a kind of setting out of some of the preliminary work. And again, they will then take on a whole range of additional feedback from the different stakeholders within this and move forward. Naturally, as we get towards the end of the year when that final submission will be made to government in December 2022.
Yes, yeah, it's definitely had a positive reception, but as you said, still a long process. And even when these do come into law, we don't know how it's going to be applied by the regulator and licensees and things like that as well.
Yeah, and we haven't seen anything specifically in there. When we seen a lot of talk about, are there going to be carve-outs and stuff for accountants, or separating strategic advice from product-based advice? And none of that has been reflected in here. So, there are still a lot of unknowns about the different roles that different advice providers will be able to play. And I refer to, things like the limited license framework at the moment and so forth. But the overarching concept here is that, if we want to move to a profession, we have to let professionals do what they do best, and then have, codes of conduct and disciplinary actions and other things that underpin the way in which that advice would be provided, which is what's happened in many other professions for not just tens of years, but hundreds of years in essence as well. So, let's hope that it's a step in the right direction.
So I'm sure there's going to be a lot more discussion on this as more submissions and things come out. And it's also going to be something that Brian Asherton is going to be discussing at our upcoming SMSF Strategy Day. So we've got a whole lineup of expert speakers for that. And it will be taking place in Brisbane, Sydney and Melbourne throughout October. If anyone wants to find out more information or purchase tickets, you can visit smsfstrategyday.com.au, and there's more information on the sessions on there as well.
Yeah, and very much looking forward to it. Obviously speaking myself, but also MC at those events. And as you said, Miranda, there is a fantastic lineup of speakers and topics. So if you haven't checked that out and want to find out more and take advantage of the special pricing that is currently available, as Miranda said, get on to the smsfstrategyday.com.au to find out more and get your tickets. So what else, Miranda, has been happening on the news?
So also in the advice sort of space, we had the results come through for those last two advisor exam sittings, and about half of the advisors, unfortunately, didn't pass with those exams. So, which sort of leaves them in a bit of an uncertain position, as there's that 30 September cutoff date in which they had to pass the exam by then.
Yeah, so naturally, we've gone through a period where we've seen quite a significant reduction in the number of advisors. We now have a position where there are a number of advisors again that have not been able to pass this exam, and we end up with another trimming of the number of available advisors. I saw a statistic recently, that looked at the net loss of the industry. So the number that have left the industry in the last few years, compared to, and I can't remember the number, it was less than 50, that have actually came in, and just that real disconnect that we have at the moment, which is why all these quality of advice rules or changes potentially, and the framework for new entrants and stuff to come into the system and help fill the gap, I guess, in this advice need as well, is going to be so important to get right.
Yeah, and there's also been a bit of a suggestion that might be a bit of a workaround for these advisors. If they take themselves off the register, they might be able to rejoin once they have passed that exam, which would sort of minimise the impact of otherwise being classified as a new entrant. So Hopefully that eases the burden of that slightly.
Yep.
The other thing we saw was just the ATO updated their trustee disqualifications for the 21-22 year, and there was a slight increase there of 27% increase. So over the whole year, they actually disqualified 250 SMSF trustees.
Yeah, and again, a lot of this disqualification process comes through, their audit approach in respect to contraventions, also naturally those that become disqualified by some other means through bankruptcy or whatever the case may be. So, but what does make it very clear when we see these sort of things is the actions that the ATO will take where there is deliberate or blatant disregard for the law. I think last session we spoke about the case, I think it was Gargapoulos or whatever it was, where they in essence just rip money out of the fund. And so it's the behaviours that become really important in some of these things as to the actions that the ATO will take. There have been a few years here of potential challenges where the ATO has worked with many trustees to ensure compliance, but a 27% increase is still a material sort of uplift in those that have been disqualified. And it is one of the last tools that the ATO really want to use. So to see that many here is certainly enough evidence to say that, the actions that individuals take and the response to the ATO in this process will be critically important to the way in which the ATO will deal with trustees that aren't doing the right thing, and their behaviours don't represent that they want to do the right thing either.
And the other sort of big thing announcement we saw was that AFA and FPA are planning to merge together.
Yeah, so again, this is something where I think I can't remember whether this has been spoken about in the past or not, if I can recall. I don't know whether you remember that or not, Miranda.
I think it's actually quite a new announcement. I think there was maybe a hint about it that they were sort of
some time ago.
It was on the cards, but it's probably the first time they've said anything really solid about it.
Yeah, so it'll be, again, kind of looking at unified voices here is important. There'll naturally be some, I guess, things and challenges that would need to be worked through. But, that merged association, I think, is important because it does provide clarity on positions. So if submissions are being made, there are not potentially competing views. And we know how well governments respond when industries or associations and stuff actually come together. And we've seen that through the quality of advice review. We've seen that if you look at things like NALI and so forth. So, again, there would be a lot of water to go under the bridge. But it appears, though, that to get to this point and to publicly recognise that there is some level of appetite towards it. So it will be fascinating to see, how this transpires over the next few months.
Yeah, I think, as you said, it's sort of focused on making a more unified voice for that industry. But, it'll be interesting to see how that pans out.
And its relationship, I guess, back to the quality of advice review too, when you think about it, because it's, you do want a unified voice if they're to become a profession with professional standards and so forth, that you do have a key representative body that by and large looks over the majority of practitioners that are currently operating. And again, you can see that being a step towards the outcomes of what Michelle Levy's trying to imply through that quality of advice, the initial sort of interim report that we've seen.
So shortly I'll be speaking with Shirley Schaefer from BDO and Chris Levy from Aquila Super. They're going to be taking us through what are some of the top issues in the SMSF audit space at the moment. And there's plenty sort of happening with audits at the moment. So I'm sure it'll be very insightful. So we're now joined by two SMSF specialists. So today we're joined by Shirley Schaefer, superannuation partner at BDO. Shirley leads the superannuation team at BDO in South Australia. We're also joined by Chris Levy, partner at Aquila Super. Chris established Aquila Super back in 1997 and is another industry expert as well. So in the last few years, there's been a fair few changes happening in the audit space. We've had increased requirements in terms of the level of documentation and evidence increasing. We've also seen changes like SuperStream and the independence changes. So there's definitely a fair few sort of ongoing issues. So to talk us through those issues, we're joined by Chris and Shirley. Welcome both.
Yep. Thanks, Miranda.
Thanks, Miranda.
Thanks so much for joining us. So I think perhaps we could start with the issue of valuations, which I think you've both previously spoken about before. So just to start with you, Chris,
Sure.
What are some of the issues you're seeing with that? And are you still getting a lot of pushback from clients where you ask for additional evidence and valuations and things like that?
Well, look, I mean, it's a new year, so I'm optimistic. But look, last year was terrible. Many accountants didn't really have a firm grasp as to what was required, especially in the area of commercial property and unlisted trusts and companies, and they tended to leave it basically to the last minute, and so the whole job would sort of hit this brick wall at the most inopportune time. The accountants finish the job and they want to get the returns finalised, and all of a sudden the whole thing would grind to a halt. And where the valuations weren't up to scratch, they fixing it for commercial property without comparable sales, or with the trust, there was a lot of effort that required to do that. It wasn't, whereas residential was a lot easier. So I'm optimistic this year there's a greater understanding of it by accountants. I don't know what you sort of found, Shirley, but yeah.
Similar things, I think, Chris. I'm probably less optimistic than you are for 2022 year ends. And the reason I am is that I think accountants, particularly if they've gone to all that effort in 2021, they will think they've done their job, or they think the trustees have done their job. But, of course, in a lot of regions, we saw prices move substantially again, or particularly around property, for up to 2022. Admittedly, some of them seem to have come off now, but of course that's post-year end. It's not at 30th of June. I've had a few areas, I do audits for some regional and rural accountants, and let me tell you, in the middle of the Eyre Peninsula in South Australia, there's been not a lot of property value movement. It's not one of those coastal areas that people are migrating to with the great, tree change or sea change. But in a lot of places and for a lot of properties, I think we'll see substantial movement again to 22. And I'm just a little scared that the accountants and the trustees will think, oh, well, I did that last year, so I don't need to do it again. So I'm more pessimistic than you are.
And are there particular types of properties that tend to create extra challenges?
Look, I mean, the obvious answer to that is the more unusual property, and it can be unusual because of its location. Particularly sort of, as Shirley pointed out, those regional areas where you don't get a lot of sales. There's not a lot of comparable information there. We have had some accountants in these rural areas quite exasperated because they understand what's expected, and they just say, look, I'm sorry, but there just isn't that information available. And the real estate agent says, look, I can't give you that. They're providing comparable data from properties hundreds of kilometres away, and you sort of go, well, how solid is that? Also, property that's quite unique. We had a bakery in a sort of semi-regional area. There was a property, but they customised it to such an extent that it really could only be used as a bakery. And there isn't a tremendous amount of comparable data for bakeries, so you can sort of see that's where problems arise.
Is that also sort of what you're seeing as well, Shirley?
Yeah, it is. And I think the other one, of course, is the commercial properties. As Chris mentioned, they're not as straightforward as residential. It usually costs the trustee, a fee of some description, and quite often not that cheap to get a proper independent appraisal or sworn valuation done. And, if we have to go and do it all over again for the 2022 year, we're going to have a lot of grumpy trustees having to fork out money they don't think they should be, when they're trying to save for their retirement. So it's I suppose, and we're even seeing some real estate agents are pushing back on providing those free appraisals anyway, because they know they're not going to get a sale out of it. So we have seen some of them push back on that or charge a fee for it. And when you think about the fees that we charge as auditors compared to what these guys want to charge for valuing one asset, it makes me think I'm in the wrong game.
Yeah. Look, I mean, just on that, Shirley, I mean, as a sort of again, it's my natural optimism. I think the free valuations, I'm not seeing a lot of that. Those free ones, particularly in the area of commercial, they're pretty much useless. Yeah. But I think particularly when you put the fear of the ATO into these trustees, they recognise that they're prepared. They have to spend some money to abide by the rules. I mean, if you've got a property sitting in your fund worth $1 million, spending a couple $100 or $1,000 every couple of years, if it's done right, it's just a cost of doing business, so to speak. And at the same time, I've noticed some real estate agents starting to realise that this is a good, this is the potential good, new market for them, and they're preparing special SMSF valuation reports that, they essentially answer the questions that the ATO put to the trustees, which is heartening. And hopefully that sort of, builds up a bit and becomes more prevalent, makes our life a bit easier.
Some of those valuation costs and extra requirements are putting SMSFs off investing in things like real business property, or is it just sort of seen as part and parcel of investing in those kinds of assets?
I don't see it being putting anyone off. I still see quite a bit in that space. We're still seeing funds being set up to do property investment on a fairly regular basis. So as Chris says, it is a cost of doing business. And maybe the people going in now at least are going in with their eyes a bit more wide open, if you like.
Yep. Yeah, I actually absolutely concur with that. With regards to property, it's just an extra little cost. And considering the other costs that they're incurring, land tax and other, management fees, it's not that significant, and it actually does provide some insight to the trustees, in terms of what the market thinks their property's worth, and it can also be useful as a related party tenant. It can help with the sort out the market rate of the rent. For non-property investments, though, that's where it's having an effect.
So we know that valuations have also been a bit of a tricky area for more unusual types of investments, such as unlisted trusts and companies. Are you seeing any kinds of issues with that? Maybe we could start with you, Shirley.
Yeah, we are. And I think the issues that I'm seeing are more around those unlisted trusts and companies that aren't property-based. Is they're property-based entities, it's the same sorts of valuation issues we've previously just been talking about. But if it's an operational entity, or if it's a startup company or an R&D company, how do you value those shares or units? And it's not going to be based on the underlying assets. It's not, particularly if they're operational, it's not going to be based on those underlying assets. It's going to be based on the profit and the operations that those companies generate. For the larger, more established ones, you might actually find that there is some information available for trustees, but it's those ones that aren't yet well established, that are perhaps still in the startup phase, that are perhaps a bit more closely held. People just don't understand that, I paid 10 cents a share for it, so that's what it's worth. Well, that's not value. That's cost. And getting them to understand, and again, they mightn't have the influence to get a valuation done. That may be the only super fund investing into it, so the other people aren't remotely interested in terms of what its market value might be. So it's those sorts of hurdles. And for some, I was looking at a fund just today. Pretty much that's the only asset is an investment in a private company. And funnily enough, it's the only audit query I've got on it.
And what kinds of any challenges you're seeing with that, Chris?
Oh, yeah, absolutely. The unlisted trusted companies is definitely where a lot of the grief is happening. Again, accountants weren't prepared for the types of questions that auditors were asking based upon the ATO valuation guidelines. Getting a valuation of sorts, in some cases it can be quite easy, again, depending on the underlying activities. In many instances where it was a sort of not a widely held property trust, but certainly not a related party, they may have actually had property valuations done, valuations done of the underlying assets, and so it actually wasn't that difficult to get that information would simply come to us, and these market rates could be established. But in other instances where nothing was done, and as Shirley pointed out, the other investors often didn't want to spend any money coming up with market rates, it became a real bind. And in some instances, there's not an easy solution to that. We have had other instances where it's a very widely held property trust, but we're not actually, the actual fund managers aren't prepared to provide those property valuations. And again, it sort of hits this brick wall, and we sort of have to try and navigate our way through. And look, there are instances where you just can't solve it. It's just you can't get a valuation that works. And you just have to sort of play that with a straight bat and qualify the audit.
Is there any other? You've sort of already touched on this, but are there any other sort of practical tips that you have for SMSFs or accountants sort of trying to get enough evidence together for these kind of assets?
Ask the auditor what they want. I think, I've joked about it, but engaging with the auditor before the audit is probably a really, really good thing for accountants and trustees to do, particularly if they've got something that isn't just a straight listed share or something you can easily get a value for, so that you can actually sort of get past those hurdles. I'm doing probably more sessions around delivering to accountants and auditors around what the auditor's looking for these days than anything else in terms of seminars and conferences.
Yeah. Shirley, are you seeing accountants' behaviour change? Are you seeing them respond to that and actually have conversations with you at the sort of the start of the jobs?
I am, yes. Maybe it's the pool of people I'm working with. I've worked hard over the years to establish these relationships, so maybe it's that. But I am seeing them respond, particularly, because they don't want it to be held up in audit.
Yeah.
Let's face it, the accountants are the ones best placed to identify where there might be financial statement issues, compliance issues, whatever they are, rather than just try and sweep them under the rug. Much better to bring them out into the open and talk to the auditor about whatever it is and what is the best way forward. Sometimes you just say we can't solve the problems and we just have to, as you say, play it with a straight back, qualify the report, lodge a contravention report. But I am seeing the people I'm dealing with coming to me prior to doing something or prior to finalising a fund.
No, look, and that's interesting because that sort of ties into what I'm starting to see as well. And I think that the silver lining of the fairly awful season we had last year is that it's sort of just shaken up these accountants that they can't just do the old business as usual. And the better accounting firms are, where they do see an asset that could cause grief, are coming to me and saying, look, we've got this from the from a real estate agent or a professional valuer, or we've got this valuation report that's been prepared for some other purpose possibly. Is this enough, or is there more information you'll need? And that's really heartening to hear, to see. And again, it sort of ties in that optimism I have. But it's not all accountants. In fact, it's probably not even most accountants, unfortunately. So but they'll learn. Yeah.
Yes, I'm sure they'll get there soon enough.
Eventually.
So another sort of big issue, and one that you're just having to deal with this year, that auditors are having to deal with this year, is obviously the new SuperStream changes. How's that sort of been going so far, and are there any kind of issues that you're seeing with that?
Lots, I think, would be the answer. And the biggest problem, I think, is that it's all new to accountants as well, particularly for rollovers. I think the release authorities are more straightforward, but the rollovers are proving to be problematic because if the data is not matching exactly with what's at the ATO, it's being rejected. We came across a different one the other day where there was a rollover from an SMSF to a constitutionally protected fund, a government fund, and, they don't use SuperStream. So they just didn't acknowledge it. The software forced the accountant to do it that way because you can't do a paper form anymore. But as far as they're concerned, they don't use it. So they didn't acknowledge it. It wasn't rejected. It wasn't just it sits there in the software in limbo, not ever being closed out. And so as auditors, you then have to go back and go, well, I need documentation to say it's done in the time frame to prove to me the money and the data's gone where it's supposed to go.
I think it's one of those few times I'm much happier being an auditor than an accountant. In many respects, our job, and I'm sort of curious to see what you think, Shirley, but our job's actually quite easy. It's sort of it's did they tick off these boxes? Did they do it the right way? And what I'm seeing in a lot of cases is they didn't. They it's all new to them. It's new to trustees. It's new to a lot of accountants. They don't really understand it. Many accountants, I suspect, still don't realise that this was compulsory since October last year, and it just wasn't done like this. Obviously, when it involves industry funds, they would have been forced to do it. But if there's rollovers between self-managed super funds, it just wasn't done. And I have a bet, there's a bet within the office that, see whether 50% of the rollovers will actually comply this last year. I'm in the betting camp. I think it's going to be more than 50% will fail. But again, this is for accountants to sort out. And the sort of anecdotal evidence we're getting back, or the comments, is that when a client wants to do a rollover, the accountant's now having to sort of set us, basically say, well, look, this is going to cost you $1,000 to $2,000 because it's going to take partner time to get this pushed through properly.
And it's as you say, they're not. What worries me, I think, a lot, and I agree with you. I think more than 50% it won't be done properly. But what really worries me is those accountants that are not using specialist superannuation software, that are not as up to date, and maybe it's just because I've got a couple of accountants that might fit within that category that are a bit, maybe they're a bit older, maybe they haven't kept it up to date, maybe they don't understand, and I suspect at some point we're going to have these issues with them, despite my best efforts at education, because they thought SuperStream was all about, if you got an AusPost, address, you're fine, move on, don't have to do anything with it. The data goes into the ether and there it stays. And there's a lot of smaller accountants that do a lot of super funds. It's not just the big guys or the big administrators.
And it's my understanding is I believe if you're not using one of the main superannuation software, the BGL or Class, I think there's only one other option available to you, which is the AusPost.
There's a couple. There is a couple, but not many.
Yeah. And but again, I think the big killer for this season is going to be just general ignorance. I just don't know that they were supposed to do it.
Yeah, I imagine it's going to be quite a challenge for perhaps trustees that aren't quite so tech savvy, or they're not on one of those big admin software systems. So I imagine it's going to be a few more issues for a while longer with that one. One of the other sort of issues that's been raised by auditors is with related property leases, which perhaps has had a bit more attention lately with the focus on non-arm's length income. What kinds of things do SMSFs or accountants need to be careful with those?
For my book, it's just making sure it's commercial. Is the term of the lease commercial? Is the rate of rent paid? Is the regularity with which rent is paid? And is debt recovery done properly? And, if somebody pays 12 months rent in advance, that's great, but would that happen, with an arm's length tenant? Is that reasonable? And is that commercial? I get a lot of clients, trying to explain to me that things are commercial when they're arm's length transactions. And I just stand around and say, well, if you didn't know the other person on the other side, would you let this happen? If the answer is no, then clearly it's not an arm's length transaction. I mean, that's somewhat basic and fundamental, but they're the things that I'm seeing that perhaps aren't being done correctly.
Yeah, I guess I'm a little bit more negative about just where that bar is, and I think it's perhaps a little bit higher. And essentially, when I'm talking to these accountants, it's the property represents a fairly significant part of the of the fund, and so getting the related party lease absolutely squared away as being commercial is critical. And I guess it sort of feeds into the valuation requirements. If you're going to get a valuation of the property, tell the real estate agent to also, add in an extra bit on the market rate as well. Like, to just do it at the same time, and it just provides that level of comfort if it ever gets scrutinised. And I guess because we're sort of looking at the gnarly is a lot more sort of front of mind. And we've been pouring into the lease, into the fine details. It's also things about the payment of outgoings. We've noticed a lot where the wrong party was paying for them, or the lease has expired and it hasn't had the adequate sort of it's gone on to month, and the client sort of, I don't know, a bit blasé about it, and we just want to try and square all that away as much as possible.
The other thing we've seen recently is a big shift in the economy, and there's been quite a bit of fluctuation in valuations, as you mentioned, both of you mentioned before. What kind of additional risk does this create for SMSFs?
Yeah, look, I think particularly on the litigation side, actually, it raises concerns. We haven't had a downturn in a long, long time, and I have a real worry that if some of these more unusual investments go belly up, the investors might be looking around for people to blame, the accountants and the auditors and whatnot, and I guess it really does mean that auditors have to just focus a bit more on just how valid are the valuations that are being shown in the financials, and going concern comes into that as well. and particularly when there's loans and these mezzanine finance loans that we're seeing a bit of. So yeah.
And certainly too, from my perspective, particularly around valuations, it's not just about what the value is, but the trustees have to just demonstrate how they arrived at that. That's going to be the critical thing. If the auditor can see how they've arrived at it, and let's face it, as auditors, we may not have any greater insight into something than the trustees do. It's about whether it's capable of explanation and does it appear reasonable. Sometimes we'll have additional information, but generally we won't. But auditors also have to be prepared to push back and not sign off on a clean audit report that perhaps should be qualified. You need to be prepared to say this is not enough, because that's where, particularly from a litigation perspective for an auditor, they'll come unstuck, as if they sort of go, oh, okay, we'll let it go now. We won't worry about it. You have to be able, that's where the auditors will put themselves at risk when the trustees are looking for somebody to blame.
And are you sort of looking for, I guess, evidence to say that they've sort of considered their investment strategy where there's been those big changes in assets in their fund and that kind of thing?
Yeah, look, I mean, reviewing their investment strategy is just a fundamental part of what we're required to do. And where you do get fairly decent movements in assets, yes, they may very well need to update their investment strategy. I guess where particular assets have a fairly they're quite high risk, whether that's crypto or whether that's a loan to a property development company, that I guess in a perfect world, they actually address that. They address the heightened risk in their strategy. And failure to do that, I mean, it could, at the very least, you'd be raising it in the management letter as an auditor, and it could actually lead to something a bit more serious in the audit opinion, depending on how important that asset was.
We've covered a fair few issues already today, but is there any other kinds of key audit issues you're seeing at the moment?
I suppose the only other things I'm seeing at the moment is perhaps an increased interest in, I suppose, non-standard investments, whether that's crypto, other digital types of assets, which is an order to make me shudder, but never mind. Or is it just that going for the mezzanine finance type of options because term deposit rates have been, so low for so long, people are looking for earnings and looking for growth. And so they're looking to take more risk without perhaps acknowledging that they are taking that extra risk. So I suppose we're seeing less what I would call plain vanilla investments in SMSFs. We're seeing more of the non-standard, I think.
I definitely agree with that. Fortunately, I'm not seeing as much crypto, although this year might be different. But yeah, definitely a push to more high risk investments. And again, I think it just ties back to we haven't had a downturn in a long time. As people don't realise that businesses can fail and you can lose all your capital. There isn't that appreciation there, and that will put additional pressure on the auditor to just make sure their files are up to scratch. And they have considered all of the relevant factors. With
the cryptocurrency, are they usually just investing in things like Bitcoin, or are they doing slightly unusual things like lending it out and trying to create income? And there's so many different products now. They're mainly sticking to the standard kind of types, or what are you seeing with that, Shirley?
Well, certainly the ones I've seen are mainly just the standard types. They're not mining Bitcoin or anything like that. They're just investing in it. So, and it hasn't been huge numbers, but there's definitely been a slight increase over the last couple of years in that sort of stuff.
I agree. I've heard about these strategies, or these products where you can, give authority of your crypto over to another party and you get interest and all that sort of thing. Or was it stake the crypto? And I haven't seen any of it, but yeah, I mean, it is, I guess, inherently more risky. You sort of got the natural risk associated with crypto, and then put something else on top of that. And there could actually be compliance issues with some of those where you're giving effectively someone a charge over your crypto. That could create compliance issues. Hopefully, I don't see them, and they all go to Shirley, who's the expert on crypto auditing.
Oh no, she's not.
All right. Thank you so much for joining us today. You've both given us some very insightful tips and a big explanation about everything happening with audits at the moment. And yes, thanks so much for joining us.
Pleasure.
Thanks, Miranda.
Thanks, Miranda.
So, Miranda, that was a fantastic interview that you did with both Shirley and Chris. What were some of the key takeaways there from that discussion that you had with them?
So I think the main message that they really wanted to get out to SMSF professionals and their clients was that where they have perhaps assets that are a little bit more complicated, or it's difficult to get evidence and valuations and things like that, that it's always best to sort of be proactive and ask the auditor what they need sort of ahead of time, so that we don't run into all those delays sort of last minute, late in the year type thing.
Yeah, so setting expectations becomes really important. And that naturally has come off the back of some heightened levels of risk of auditors in the last few years. But the other thing I think is, just that level of documentation and expectation that auditors want to get is becoming more, and therefore the role that the practitioner needs to be playing with that auditor to understand their expectations, in particular with those kind of unlisted investments, is absolutely crucial.
Yeah, so they did touch on how sort of stringent and how much scrutiny sort of the ATO has been placing in terms of what evidence they expect to see. So, sometimes it is a bit of a practical challenge with some of those types of assets.
Very good. Well, the other thing that you wanted to announce is, of course, the Women in Finance Awards for 2022.
Yes, just a quick mention of that. So the Women in Finance Awards for 2022 is now officially launched. So we're now taking nominations for that and submissions so that opened up on the 11th of August, and you can send those in up till the 8th of September. So we'll need to get them in soon.
Very soon.
Yes. So, you could visit womeninfinanceawards.com.au for more info on that.
Excellent. Well, thank you, everyone, again for joining us for our SMSF Advisor Show. If you do have any suggestions about topics or speakers, Miranda, where can they get in contact with us?
Get in contact at editor@smsfadvisoronline.com.au.
Thanks, everyone, and we'll look forward to you joining us again for our next SMSF Advisor Show. Take care and bye for now.
Imagine being rushed to hospital.
Yep.
And your life changing in an instant. Imagine going through hundreds of tests and 46 weeks of chemo. Now imagine you're a child. That's why Starlight exists, to bring happiness to seriously ill children. Please donate at starlight.org.au.